What if I told you that investing in ethical companies has actually beaten traditional index funds over the past 5 years? Yeah, I was skeptical too. The FTSE4Good Index returned 45% versus the standard FTSE All Shares 38% since 2019. But here's the thing. Most people get wrong about socially responsible investing. They think it's either super complicated or that you're sacrificing returns to feel good. Both are myths. In the next 7 minutes, I'm going to show you exactly how these funds work, whether they're actually worth it, and the 3 platforms where you can start investing in them today, even if you've only got 50 quid to spare. I'm here to make personal finance actually make sense for people like us in the UK. Today, we're breaking down socially responsible index funds, also called ESG funds. That stands for environmental, social, and governance. By the end of this video, you'll know what they are, how to pick one, and I'll literally show you how to buy them step by step. And look, I'm not being paid by any platform I mentioned today. These are just the ones I've researched and used myself. Right, let's get into it. So first up, what actually is a socially responsible index fund? Regular index funds track the entire market, right? Something like the FTSE 100 or the S&P 500. They own a tiny slice of every company in that index. ESG index funds do the same thing, but with a filter. They exclude companies involved in things like fossil fuels, tobacco, weapons, or those with poor labour practices. And they favour companies with strong environmental policies, diverse leadership, and good governance. For example, Vanguard's ESG Developed World Fund owns over 400 companies but excludes about 400 that don't meet ESG criteria. So you still get massive diversification, but you're not inadvertently funding things you might disagree with. Now, there are 3 main types of ESG funds available in the UK. Negative screening funds, which simply exclude the bad stuff. Positive screening funds, which actively seek out sustainability leaders like renewable energy companies. And impact funds, which invest in companies specifically trying to solve social or environmental problems. Most beginner-friendly options are negative screening because they're cheaper and track broader indexes. The Vanguard ESG Developed World All Cap Fund has an ongoing charge of just 0.26% per year, which is brilliant. Right, the big question. Are you sacrificing returns to invest ethically? The data might surprise you. Over the past 10 years, ESG funds have largely matched or even beaten traditional trackers. The MSCI World ESG Leaders Index returned an average of 12.1% annually versus 11.9% for the standard MSCI World. That's basically identical when you account for variance. Why? Because companies with good ESG practices often have better management overall. They're forward-thinking, they avoid massive scandals, and they're preparing for future regulations. Think about it. A company investing in renewable energy now won't get crushed when carbon taxes increase. However, and this is important, ESG funds can underperform in certain sectors and time periods. When oil prices spike, traditional funds with heavy energy holdings might do better short-term. But over the long haul, the difference is marginal. The real point is this. You're not tanking your returns by choosing ESG. You're getting similar performance with better alignment to your values. Just don't expect ESG to magically outperform every single year. That's not how investing works. All right, let's get practical. Here's how to actually buy these funds in the UK. Step 1, choose your platform. The 3 I'd recommend are Vanguard Investor for simplicity and low fees, Hargreaves Lansdown for choice and research tools, or Invest Engine if you want a totally free option for ETFs. Step 2, decide between an ISA or a general investment account. If you're investing less than 20 grand a year, use a stocks and shares ISA so your gains are completely tax-free. Step 3, pick your fund. For beginners, I'd suggest the Vanguard ESG Developed World All Cap, which gives you exposure to over 1,400 companies globally. Or if you want UK focus, the iShares MSCI UK ESG Screened Fund. Both are available on all 3 platforms. Step 4, set up a direct debit. Even if it's just 50 quid a month, consistency beats timing. The platforms will automatically buy more units each month. Step 5, leave it alone. Seriously, ESG index funds are long-term investments. Don't panic sell when markets dip. Let me show you what this looks like on Vanguard. You'd log in, click Add an Investment, search ESG Developed World, select the fund, Choose your ISA, enter your monthly amount, and confirm. That's it. 5 minutes, and you're an ethical investor. Before you dive in, 3 quick warnings. First, greenwashing is real. Some funds slap ESG on the label, but still hold dodgy companies. Always check the actual holdings. Vanguard and iShares publish full lists. Second, ESG doesn't mean perfect. These funds might still hold companies you disagree with because ESG criteria vary. If you want full control, you'd need to pick individual stocks, but that's way riskier. Third, fees can vary massively. Some actively managed ESG funds charge over 1% annually, which will crush your returns over decades. Stick to passive index trackers under 0.3% if possible. The Vanguard fund I mentioned is 0.26%, which is spot on. Right, let's recap. Socially responsible index funds let you invest in line with your values without sacrificing returns. They filter out harmful companies while still giving you broad diversification. Performance has matched traditional trackers over the long term. And you can start with platforms like Vanguard, Hargreaves Lansdown, or Invest Engine inside a Stocks and Shares ISA for as little as £50 a month. If you found this helpful, do me a favour and hit that like button. It genuinely helps the algorithm show this to more people. And if you want more practical investing content for UK 20s and 30s, subscribe because I post every single week. Next, I'd recommend watching my video on how to actually pick the right index fund for your goals. That's on screen now. Thanks for watching, and I'll see you in the next one.